Hey, good morning, small business owners. Rebecca Burnick here from Office Heads. Welcome. Thank you for joining me for Monday Morning Metrics. I am the CEO and founder of Office Heads. We are a financial management company located in Evanston, Illinois. We help small businesses not only do we provide bookkeeping and accounting, but mostly we help small business owners to understand how to read their financial reports. So here we are today, Monday Morning Metrics. I talk about a bunch of stuff, how to operate your business, how to understand your numbers, how to not be afraid of your numbers. So today, thank you for joining me. We're going to talk about financial reporting and not just talk about it. I am going to, for the first time, going to use this fancy technology that I have, and I'm going to share my screen and show you some things about QuickBooks. So before we jump into reading your financial reports, I want to talk about a few things. Because here we are, it is the 18th, happy birthday to my sister, 18th of February. And so if you're following the calendar or schedule for best practice financial management, you've got 2 financial events under your belt. So 2 of them, I think there's 5 financial events every year, but 2 of them are really the IRS says that there's financial events. So in January, we focus on closing up your books and sending out 1099s and W-2s to your employees and your contractors. The deadline for that was January 31st. So done, right? And so also then you know that your 2018 or your previous year has been reconciled and ready to go. That's really important because in February, we're putting together our CPA tax packages because as we all know, whether we like it or not, tax returns are due March 15th and April 15th. March 15th is your business deadline for corporations. April 15th is your personal. It all flows through on whether or not your data is correct. So as of the 15th of February, hopefully those CPA tax packages have been sent to your tax provider. They've got access to all of your books. Your books are clean and reconciled. They've gotten all of your statements and everything. They have everything that they need to file to prepare your tax return. So, you've gotten those 2 events out of the way. What is the next thing that you are going to do in terms of finance, right? You're operating every day. You're running your business. You're selling. You're delivering. You're doing all of that. But here we are on the 18th of February. Your January of the new year should be reconciled. It should be reconciled. The numbers should be double checked. Everything should look good. And now it's time to put on your operational CEO hat and take a look at those financial reports, how to generate that financial report and how to look at it. So I am going to share my screen. Let's see, how do we do this now? I'm going to share my screen and show you what I look at and how I generate financial reports. And this is kind of exciting because here we are, the beginning of the new year. So we can take a look at 1 month. So what we're looking at here is a fictitious company. QuickBooks Online allows you to play with some things with this fictitious company. And so that's what we're going to use to kind of run through how to look at things. So the first thing that we're going to do, because we're assuming everything is reconciled, right? So that's great. First thing we're going to do is we're going to generate a profit and loss statement. So you click on reports. Here under standard reports, it should be right on top. If it's not on top, find it down here, click a favorite next to it, and it'll pop up here. Click on it, and you get your profit and loss statement. Okay, so right here, a lot of times with small business owners, your eyes gloss over and you go, okay, what am I looking at? What am I supposed to be looking at? So let me give you a few tips. So the first thing I'm gonna do is I'm gonna kind of change this report so you can take a look at this section up here, which is how you tell QuickBooks the information that you want to pull from. So the first thing here is this year to date. It may default to this, it may default to the last thing that you looked at, but you should always look at the time reporting. So right now it's this year to date, January 1 through February 18th. So today is the February 18th. However, here's a tip. Do not analyze reports unless everything is reconciled. Because if it's partially done, you don't want to be looking at numbers or partially done reports. So we know in this instance that we're in the middle of February, it's the 18th, and we have reconciled, right? We have reconciled our reports. So we know that January is all that we want to look at. So I'm going to go up here, and I could say last month. I could manually type in the time frame, but this one's a good one. This year to last month. So it'll say just this year, don't go into any previous years, and do it to last month, assuming that you've reconciled up to the last month. Now, always with using QuickBooks Online, you need to run the report. So I've changed it from this year to last month, and I'm going to run this report. Now, I'm going to quickly pop back up here and talk a little bit about other things right now. Display, we're going to just display total only. Now, I will tell you that my favorite P&L is the P&L by month, but we don't need to do by month. We only have 1 month. So right now, we're just going to do the total only. When we go to look at our February, we're gonna use a different option. But for now, we're going to go with total only, and that is just fine. Let's talk here for a second about the accounting method. Accrual and cash. It will default to how you set up your QuickBooks, and I set up my QuickBooks for accrual, but you can very easily hit cash and run your report. Let's talk a little bit about the difference between cash and accrual. Accrual books the revenue and the expenses on the day it was entered in. And it doesn't matter when the money hit the bank. So if I send out an invoice for $1,000 and I hit my accrual, it's going to count that $1,000 in my reporting. If I just say, no, I want to know the money that's hitting my bank, and then you hit cash and run that report. So it depends on the questions that you're asking and the information that you want to have back. Now, let's quickly look at this. I ran an accrual report, and in accrual, this particular person, Craig, invoiced $7,371.52. If we were to look at cash income, that's $3,857. So he has some invoices that need to be collected. Only 3,000 something of that 7,000 hit the bank. So one is important if you want to take a look at the larger picture of what you're invoicing. The cash is really about cash flow, and that is super important, because if you say, yeah, I've got 7,000, you don't have 7,000, you might have 7,000 over the course of time, depending on how you collect. But for this case, in the bank, you've received 3,857. So for what we're talking about today, it doesn't matter, cash or accrual. I'm going to hit accrual, but then I want to go take a look here quick to compare another period. So if you go down here and you select percent of income, one of my favorite reports, and this is how you start to select your KPIs. KPIs mean key performance indicator. And there are 3 that I think are must-haves for any business. One is the percentage, one is the dollar amount of income. The other is percentage of gross profit, this number right here. And lastly is your profit margin, which is really your net income right here. So in this instance, so this is really easy on how you look and monitor your KPIs from the previous month. But once you do this for a long time, you're going to know you're going to want to set those goals. So in this instance, Mr. Craig, who does landscaping services, invoiced around 7,000. He spent 400 delivering that, and so his gross profit is 94. Once you start looking at this over and over and over again, you're going to know what your gross profit is. And this piece right here, super, super important. This piece right here talks about the effectiveness of your organization. The money comes in, and then the money that you spend in order to deliver that service or deliver that product is how efficiently your company delivers its service. And then in this case, it was 94%. Wow, he only spends 5% of his income to deliver a service. That's tremendous. It's very efficient, a well-oiled machine. And that rest of the money he gets to make choices on how to operate. So that's a really important number. And oh, by the way, that 5% of cost of goods is pretty low. So as you know, we are looking at just a sample business, not really accurate, but it's important to understand the meaning behind these margins and these numbers. So that gross profit percentage is super important. And then net income, which is profitability. He had in this month, last month, profited 4.5%, which means that, yeah, he had a lot of operating expenses, which is just keeping the door open. Let's run this quick on cash. And let's just make these small again because we really don't need that just for our purposes. So he really brought in 3,800, still at 5.93%. But look at that. He spent a lot of money in January just keeping the doors open, and then he experienced a loss. Here's your negative. So if you select your KPIs as goals, and then you can compare it against actual, you get an idea, you start to get an idea of the efficiency of your business. You have a goal. I want to be 5% profitable. You have a revenue goal. I want to bring in $10,000 a month. You have a cost of goods or a gross profit goal. I want, and I'll speak for myself, I want 60% of everything I bring in to give me my choice of operations. So if I want 10% profit, 60% gross margin, you take 60 minus that 10% gift, and you've got that difference of 50% that you have to pay rent, pay your employees, just keep your doors open. So again, let's just go quickly back to the report here. The most important things to think about is this year to the last month, making sure that that month is reconciled. For our purposes here, we're going to do totals only. In February, we're going to go to monthly, and that's going to be super, super fun. Selecting how you want things to be compared. And for our purposes today, this is picking KPIs on getting to know and understand what those key performance metrics are and understanding what they should be, and then comparing that to what they are, seeing if you need to make any changes, and then the difference between cash and accrual, and then you run your report. So there you go. That is how, on a very high level, you analyze a profit and loss statement with actual data. So do this in January, do this in February, do this every single month. And then we're also start to look at trends. Make your decisions based on your numbers. Do you need to sell more? Do you need to spend less? What's happening with your business? So there you go. There is a quick rundown of how to generate and analyze a profit and loss statement for 1 month. And our purposes here, January, first month of the year, we've got 11 more months to make sure we have a profitable 2019. So thank you for joining me. Always use the comments below. I'll bring up any topic and talk about anything when it comes to finance with small business and business operations. Would love to be able to have subject matters that you're interested in. So use comments, and I will structure future Monday morning metrics to serve you. Thank you for joining us, and have a great and profitable week.